Today is Monday, October 31st. Happy Halloween. There are three charts I want to look at. They all show breakdowns. You can interpret at least two of them to be pretty bad for the stock market. Let's take a look. This is the Russell 2000 up on the screen now. And you can see the 50-day average here broken to the downside. Yes, it's been below it before, but this is where the average is really starting to roll over, and you had a breakdown and a rally to test the breakdown. So that's pretty bad. Look at a couple indicators. You can see RSI looks pretty bad coming down in here ahead of the peak. You can look at a couple other indicators. You know, MACD's kind of saying the same thing. Relative performance, this thing's been outperforming for quite a while. And you look at it, and we have small breakdown right there relative to the S&P 500. Not a good thing. Let's look at one more item, which is even more damning. And check this out. I'm going to draw in a support level here that matches the high over here, the low over here, which is in the middle of this possible double top or even strange double head and shoulders pattern. But that's not what's important. What's important is a support break. And take a look at this. Scrolling back in time, look at that level. Here, here, here. Over here, the highs in 2014. That is a pretty significant level. Look at it in weekly format. Let's get that in weekly. And you can see it's a pretty important level. All right, and it is now broken to the downside. So, small caps. Not your greatest sector right now. Moving on, looking at railroads in the transport sector. Check this out. We have the trend break, not quite. Alright, but it does look like it's rolling over. The momentum indicators heading down even though price was heading up. On balance, volume took kind of a hit last week. So is this a double top, mini double top? Well, it's so small that all you could say is that it's going to head down to the trend line, which it did. So here we're in a critical area for the railroads. See what happens. I'd be watching this one pretty closely as an important sector for the market. And finally, let's look at bonds. It's the TLT ETF. 50-day average is really not so relevant here, so let's just get rid of it. And we'll put some lines on the chart. You have one declining trend line here. Does a parallel line mean anything? Well, it kind of does. It's at the bottom of that level now. But this support level is broken to the downside. And if we look at some other indicators, on balance volume heading down, but not by much. Volume itself not doing much, but looks weak on momentum. And relative to the stock market, well, kind of hard to compare these two since they go in phase and then out of phase together, so who knows on that. But if you're looking at just the big picture here, this breakdown is probably not a good thing for the bond market, meaning interest rates possibly going higher. I'm not going to speculate on the Fed and what they're going to do or what this means. Just looking at the market, it's possibly oversold here on a short-term basis, but you know, have a gap down here below support. I think that's pretty negative. So just to sum up, the Russell looks bad. Railroads, I think, are at a crossroads, and bonds kind of weak right now. Interest rates heading higher a little bit. There you have it. Talk to you later.